Welcome to Invest in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And it is great to be back with you today. I've been off for about a month, or taking off from podcasting and other business ventures for about a month in July. Obviously, we had the big summit back in June. And as I mentioned, we'll be back with you in August. So here I am. And I really appreciate everyone who's reached out in the interim and asked about how things are going and when I'd be back. It's always great to hear from you and know that you're missed a little bit. So thank you for that. And as mentioned before, I am very interested in digital currencies, cryptocurrencies, Bitcoin, Ethereum, things like that. And as mentioned before, many of you replied and said you wanted to hear more about it, and I wanted to talk about it. So I'm going to devote this episode and most likely the next episode to digital currencies. And again, there is so much that can be discussed in these topics, so much more than can be covered into 30 to 40-minute podcasts. But hopefully, through these podcasts, at a minimum, it'll help give a little more clarity in terms of what these things are. That's kind of the goal of this episode, and maybe a little bit ambitious, but hopefully successful. And the next episode I intend to launch next week will be focusing more on some practical inner workings of digital currencies in terms of like how to buy them, how to use them, how to store them, and so on, and kind of what some of the different main digital currencies are and what their purpose is, how they're useful, and why they may or may not mean something to you. And again, if you enjoy this podcast, go right now and subscribe either at iTunes, Stitcher, the Google Play Store, wherever you're hearing this podcast. Click that subscribe button, and that way, whenever I release a new episode, you will be among the first to know. So that way, you won't miss a thing. But let's go ahead and dive in. Let's talk about digital currencies. And again, this is a topic that lots of pages and blog posts and talks have been done and will be done and can be done on. But what I want to do is try to just answer some basic questions, or at least provide more clarity. Most likely, most digital currencies are such a new idea that hearing an explanation once usually isn't enough. A lot of times it takes some dialogue and some processing to kind of get your mind around. Because it's just new. It's a new way of thinking. It's a new way of potentially doing things. So what I'm going to do is I'm going to talk a little bit about what is money, which obviously, some of you are probably laughing right now because that's a topic that can be debated significantly different ways. But I'm going to give a very simple view of what I think of way you can think of what money is. Talk about what is value, a brief history of money, just because I want to show how money has evolved over the years and why maybe the jump to digital currencies or inclusion of digital currencies in our economy may not be as radical as we may think. And then talk about, what are some arguments for digital currencies? Why are they significant? What are some of the terms that we hear about them, like blockchain and things like that? And what does that mean? So we're going to talk about some of those things today. So hopefully you will enjoy. And it stems too, because I had a conversation. I was with some friends at dinner the other night, and Bitcoin came up, probably because I most likely brought it up because I do that. And one of them asked, "So what is Bitcoin? What does it do? How do you use it?" And kind of those typical questions you get that usually are coming from an extreme form of skepticism, which I totally understand. And I think it's good to come from that perspective when something's really new, but it's also good to not remain in our ignorance, hence today's episode. So again, what is money? And if you look up different talks and stuff online, you're going to hear lots of things like, well, is it fungible? You hear weird words like fungible and transferable and things like that. I don't want to get into all those details because I feel like that's how we can academically describe money, but money is something that we use as a unit of exchange. It's a way to store and transfer value, period. Like someone out there on the street isn't going to look up the definition of money to decide whether or not to receive currency from me, right? We both agree that this item, a dollar bill, is a way to store value and transfer that value, right? So here in the U.S. where I live, U.S. dollar bills, physical pieces of paper, we can transfer them back and forth, and that is a known and accepted medium of storing and transferring value, okay? You can make all the arguments you want about whether it's the best way to store value and transfer value, but it is a widely accepted means to store and transfer value in the U.S. and around the world. And that's kind of my working definition and view of what money is. Again, I don't use oil as money but oil has value. It's an asset. But carrying around barrels of oil and transferring that doesn't make any sense. It does not divisible. It is divisible, but not easily. And there's all kinds of issues with that. Okay, so that's a working view of money. It's a way to store and transfer value. Okay, so let's keep that in mind once we start talking more about digital currencies like Bitcoin. What is value? And value is extremely relative depending upon person and circumstance. Basically, value is what can something be traded for? So if I have an item that I consider to be valuable, I'm sitting here at my desk and I can pick up a pen sitting here at my desk, and okay, this pen has value, but how valuable it is really depends upon, well, what will someone give me for it? I value it on a certain functional level, but does this other person value it the same way? There's extreme relativity in that sense. But again, the benefit of having a currency like a dollar, like the US dollar or any number of other currencies around the world, is that there can be an accepted agreement upon the value of that dollar, right? Which again, if we get technical, there's technically lots of a disagreement about the value of a dollar, depending on how we price items. Because if I go down to Exxon over here, a gallon of gas may cost, I'm making up numbers, $2. But if I go down the street to Chevron, that gallon of gas may cost $2.10. So those people are disagreeing in the value of either the dollar or of the product they're selling. Are those equal? Is the gallon of gas at Exxon and the gallon of gas at Chevron the same? If so, then they're disagreeing upon the value of the dollar. Or maybe they're saying, well, my product, dollars are all equal, but my product is worth more dollars than your product is. So there's a lot of relativity in that sense, but we don't have to go down that road right now. But again, value is relative. If I have a bottle of water and I go down to the gas station or a grocery store, let's say that bottle of water cost $1. Okay. So, okay, $1 for a bottle of water. Great. Sounds awesome. But if a month from now, the power grid in the U.S. gets knocked out and there's no longer power in the U.S., or in my part of the U.S., there's no longer running water, that bottle of water is going to be worth a lot more than $1. Okay. And so the exact same item can extremely have an extreme shift in value when circumstances change. Okay. So money is a way to store and transfer value, and value is very relative depending upon the person and the circumstance. And so again, we could talk about those comparisons for a long time, but I won't spend too much time on that. But it is helpful to have some kind of a view of those things when we invest at all, but especially when we're talking about things that can be considered currencies like digital currencies. So let's talk a minute about history of money. Again, huge topic, and some of you, you're going to go crazy because I'm going to be super generic and general in my description of this. But I think all I want to highlight is how our view of money has changed throughout history. Okay. And let's just use the U.S. as an example, because that way we're not going back thousands of years and hundreds of years and stuff. But here in the U.S., there was a time when gold and silver coins were a primary, maybe even a major source of currency or money in the U.S. So if you want to buy and sell something openly, the primary way you do that is using gold and silver coins. Okay. And I may be getting timing mixed up a little bit. Just gold and silver, okay? Someone's going to send me an email, be like, you got the order of history wrong, and that's fine. Let me know, because I love to learn. But at some point, we went from actually transferring gold or silver from one person to another to depositing that gold into a bank, and that bank gave you a bank note, a piece of paper, and that piece of paper said, hey, if you redeem this piece of paper, then whoever redeems this piece of paper can have the gold. So whoever owns the paper effectively owns the gold, right? And each individual bank could issue their own banknotes, or essentially their own currency. And so using modern examples, JP Morgan Chase, if they were operating under the system, could offer Chase banknotes. Bank of America could offer Bank of America banknotes, and those notes are fully exchangeable within other Chase banks and people using Chase notes. But how a Chase note compares to a Bank of America note can depend upon, well, how much gold does Bank of America say the note's worth, and how much gold does the Chase note say their note is worth, and how reliable is the Bank of America's word, and so on. Because if Bank of America goes bankrupt or ceases to exist, those banknotes are therefore worthless, okay? And that's a helpful illustration, too, to think about currencies as we know them today, because now we don't have banknotes per se. We have usually, like in the U.S. you have the Federal Reserve currency notes, or we have currency issued by the Federal Reserve, U.S. dollars. And those are backed by the good faith and promise of the U.S. government, because the U.S. government has said, we will accept U.S. dollars for payment of taxes and other obligations to us. Therefore, we are saying this currency has value and merit, and other people can use it as a means of exchange and money and things like that. So point is, we went from exchanging gold, essentially, generally speaking, to putting that gold in a bank and having bank notes. So then we have paper money at that point. And so I'm confident at that point in time, there were lots of people that were not okay with that. They were not okay giving their gold to someone else and carrying around a piece of paper that they're thinking, well, okay, is this paper really going to give me my gold back? Is this really reliable? What if someone steals the paper? What if I lose the paper? What if the bank changes their mind, or so on and so forth? Okay. So I guarantee you there was a lot of concern and issues with that shift from gold to paper money. Okay. Then more recently, in a lot of ways, we've gone really from paper to I'll just say electronic money. And what I mean by electronic money is basically the dollars we have in our bank account, because I have money in my bank account that I will never touch. No one will ever touch it, because technically it doesn't physically exist anywhere. It doesn't physically exist in the bank or the Federal Reserve or anywhere else. It is an electronic number on a computer, and I can log on to my computer in front of me, and I can log on to my bank and say, transfer X number of dollars to my other bank, right? And at that point, that money electronically gets shifted from one place to another. What is that? That's just electronic money, right? I never touch it. No one ever touches it. And there's a situation there where it's like, well, okay, I guess I trust you, And I remember decades ago when credit cards were becoming more popular, and people talk about the idea of, they dreamed of this idea of no longer having paper money. And I remember at the time thinking, and other people thinking the same thing, of like, whatever, no paper money, that's ridiculous. How would that work? How would that look? And there's just, it just seemed like a crazy idea. It seemed revolutionary to a lot of people. But honestly, it's pretty much happened. I make almost all in-person transactions and almost all online transactions, or I guess actually I do all of them through a credit card, a piece of plastic. But honestly, even for online, I don't even need the plastic. I just need the numbers on the plastic, and then we can shift money around, electronic money, from person to person, business to business, bank to bank, all electronically. Okay, so we've had to shift from gold to paper to electronic, and what we're hearing now is people becoming proponents, of the idea of purely digital currency or cryptocurrency. And again, the idea of crypto, when I hear that, I usually think shady, because a lot of the early history of Bitcoin was associated with some shady things, which we can talk about in a minute, maybe. And so, but crypto isn't an issue of being shady. It's cryptography. So basically, the idea of security within that currency. So crypto technically isn't a bad word, even though it may sound like it, because of association with some of the early histories of digital currencies. So what I want to mention with that is the leap from electronic currency to digital currency or cryptocurrency, whatever you want to describe it as, I'll mostly say digital, is it that much bigger than the leap from gold to paper or paper to digital? Just think about that. Maybe you think it is, but looking back, we think those weren't a big deal, but at the time they were a big deal. Okay. So I just want to think about that. You think about that and realize that maybe what seems like a really big deal right now and is actually a big deal, but that doesn't mean it's a bad idea. And that doesn't mean it can't happen or won't happen. And that doesn't mean there's not a ton of kinks and issues and problems that still need to be worked out in order for, as an example, for Bitcoin or any number of other digital currencies to become mainstream and actually a significant player in our economy. Okay. So keep that in mind. So let's talk for a minute. So that's a little bit of a context for digital currencies. Because again, our definition of money is a way to store and transfer value. Bitcoin is 100% a way to store and transfer value. I own Bitcoin, and I have used Bitcoin to store value, and it has been a fantastic store of value, because Bitcoin I bought a few years ago is worth a lot more than it was when I bought it a few years ago. And also, I have used Bitcoin to transfer value, largely transferring it between different online exchanges to buy other digital currencies, which again may sound like not a good proof of concept, because you're buying, some of you may think, well, you're buying nothing with nothing. Well, not true, because those things do have monetary value, and because the market says they do. Just like the dollar has monetary value because the market says it does. If the market says it doesn't anymore, they no longer have value. Same with digital currency. It's based on trust. And the market is mutually trusting itself and each other to say these currencies have monetary value. So again, there's that. So again, Bitcoin and any number, Ethereum, these are the digital currencies. I have used them to store and transfer value. So in my mind, they are money. You can make arguments. Are they the best form of money? Okay, that's a separate conversation. And they're great. So far, they've been a phenomenal store of value. You go back and you buy Ethereum, which some of you may not be familiar with. It's the second largest digital currency by market cap. And again, market cap is determined similar like a stock would. For a company, you take the number of currency in circulation and multiply that by the value of one individual piece of the unit of that currency. So actually, let me pull this up. While I'm talking, there's a website. If you want to look at some of this stuff, and I encourage you to do so, there's a website called coinmarketcap.com. Coinmarketcap.com. If you go to coinmarketcap.com, it gives you a full listing, or mostly full listing, of hundreds and hundreds of digital currencies. And I will be the first to say the vast majority of these digital currencies on here will probably end up not being worth anything, or at least not anything meaningful or significant. But there are, I think, a lot of them that are already significant and have the potential to be, in years to come, maybe decades to come, to be maybe even household names, to be a really big deal in the economy. So there, I said it. How about that? But again, if you go to coinmarketcap.com, and they will say, like, right now, the market cap for Bitcoin is $55 billion. Okay. But then the market cap for Ethereum, the second largest digital currency, is $28 billion. Then the fourth largest is a digital currency called Ripple, and it's at $7 billion. And then you have Bitcoin Cash at $5.2 billion. And then you have Litecoin, the fifth largest digital currency, at $2.5 billion. And then the drop off continues from there. Then the top 10 digital currencies, according to the market cap, all are 1 billion and up. But really, I mean, the big 800-pound gorillas are Bitcoin and Ethereum at 55 billion and then 28 billion. Because then you go from 55 to 28 to 7 to 5 to 2 to 1. And so it drops pretty quickly. And then, like, for example, the 20th largest digital currency has a market cap of $319 million. So it drops off pretty sharply. So again, I say all that to communicate, communicate some of the sizes of these currencies and the value of them right now. And I will admit, I did lose my train of thought a little bit there. So, okay, let's come back, and I want to talk about some of the kind of key words and terminology that you probably hear regarding digital currencies, and talk about what I believe some of why these are significant, and why I think they do have great future potential. Again, that doesn't mean there's lots of issues that need to be worked out or problems solved, and there won't be plenty of pain along the way. I have no doubt there probably will, but that doesn't mean the merit does not exist. So before I get too much into philosophy of why I think there is a future promise to digital currencies, I'm going to recommend a book that communicates these things vastly better than I can at this stage. Unfortunately, I wish I could describe things better than I can right now. I'm working on it, but I'm not there yet. There's a book, a relatively small book, called The Internet of Money. The Internet of Money by Andreas Antonopoulos. It is fantastic. If you want to get an idea, I mean, this person is very pro Bitcoin, very pro digital currency, and he's also a very experienced person regarding the internet and digital currencies, and he's a very reputable source on these topics. And so the idea is, he's basically showing a vision for why these have value and significance, and according to him, why they will win out when it comes to currency in the future. So again, just a fascinating book about his vision for the future regarding digital currencies. And I wish I had the knowledge base and eloquence to share it as well as he did in that book, but I can't at this stage. Another book I want to mention is a book called Digital Gold by Nathaniel Popper. Fantastic book on understanding the history of Bitcoin, again, which may sound crazy because it's really maybe 10 years or less old, probably less than 10 years old. It really was born out of the ashes of the financial crisis. But Digital Gold is a great way to get a feel for, okay, what's happened along the way. And it may help you dismiss Bitcoin altogether, or may help you realize, maybe this does have merit. And this something that started out as seemingly nothing has become something that's really a juggernaut today. 2-3 years ago, you could buy Bitcoin for a couple $100. Now it's $3,400 a piece. Where else have you seen returns like that? What other asset classes giving you returns like that? Probably not very many. Okay, I digress again. So one of the arguments I think that is significant when it comes to Bitcoin, and again, it's hard, or digital currencies, I should say, that it can be hard to get our mind around, is the idea that with digital currencies, we no longer need a third party to verify transactions. Okay, so for example, let me give an example. Okay, so for example, right now, if I need my credit card to verify a transaction, I need American Express to verify a transaction. So if I go to pay at the pump at Exxon and I put in my American Express card, American Express gives Exxon however much money, and then later on I give money to American Express. That's a third party verification going on there, third party required there. What happens with digital currency is that party's removed. They don't need them anymore. And again, I'm way simplifying this. There's way more applications than I'm going to share right now to this. And again, I'm sure someone right now is screaming about great examples that I'm leaving out. And if you are, email me, Brian, Brian, at investorinthefamily.com. Shoot me an email because I'd love to get feedback, and because I'm totally diving in and learning this myself as well. So I'd love to learn more from you also. And so, but the idea of no longer needing a third party to verify transactions is also significant because it means you no longer need again a government or some kind of outside entity to validate a currency or a transaction. You can have open financial transactions and interactions without a federal government or a central body to verify and validate the legitimacy of that or what's going on between those two parties. So basically, you can work independently of a government, which again, you may or may not care about. Like that doesn't really, I'm not necessarily concerned about that myself. But when the early days of Bitcoin, really some of the early groups that really helped to popularize Bitcoin in the early days had strong libertarian leanings, and the idea, and this again coming out of the wake of the financial crisis, when there's concerns about quantitative easing, the Fed going out of control, printing money and ruining currency and manipulating things, as many claims were made along those lines. Out of that environment, and in a stronger libertarian environment that again did not like what was going on, Bitcoin had great appeal because it was a legitimate means of storing and exchanging value independent of any central government. And the way it's able to do that is through something called the blockchain, which I'm sure you've heard you've heard the term blockchain, and probably been like, what on earth does that mean? Why do I care? Okay, so let me briefly explain what the blockchain is. So what the blockchain is basically, it's also a ledger of accounts. So basically, if you were to download the Bitcoin or Ethereum blockchain on your computer, which you can do, it would within that software, it would record. It has recorded every single Bitcoin transaction that's ever taken place. Okay. Why that's significant is that copy, that ledger, that blockchain exists on it exists on every single computer that is running the Bitcoin software, which means there are thousands and thousands of computers that have that record on their computers, which means there's no central authority there. So if one of those computers gets destroyed, that account still exists everywhere else. So it's been verified. It can be verified by dozens or hundreds or even technically thousands of other computers saying, yes, this transaction took place. So this value was effectively transferred from person A to person B. Okay. And so technically, as long as one of those computers still exists, one of those nodes, NODES, those nodes in the Bitcoin network, as long as one of those still exists, then all those records of transactions still exist and there is still merit to them. And so effectively, it's seemingly impossible to be able to fully to destroy that, because it's on all those computers, and the same with Ethereum and a lot of most other digital currencies as well. So again, the blockchain, the reason it's called a blockchain is because, again, it's like a chain, like a string of blocks. And what a block is they're created, blocks are, I'll say, created by miners. Again, it's not the most technical terminology. And what a miner is within digital currencies is basically miners are the computers connected to the Bitcoin network that are processing transactions. Okay. So in the same way, Visa, the credit card company, processes transactions. There's a Bitcoin network the Visa network processes transactions, but the Bitcoin network also has to do that because it has to process all the transactions going on. And miners are who do that. They process the transactions for the Bitcoin network. And what happens is they process those transactions, and they're doing that, but they're competing with each other, miners against miner, to solve a complex equation involving those transactions. And whoever solves that equation gets rewarded that block of Bitcoin. Okay, so they get rewarded a certain number of Bitcoin each time they win one of those blocks. And so when they win, and in that block is basically, it's a record of all those transactions that were processed in the winning of that block, if that makes sense. And so all of those things are kept recorded on all the different computers or nodes connected to the Bitcoin network. Okay, that is the blockchain. And the reason that's such a big deal is, again, because it's a way to guarantee and verify transactions, which honestly it's honestly hard for me to get my mind around because I just don't naturally think this way. But you think someone with better expertise could like totally own this section of the podcast better than I can. But think about how much of the financial system exists just to verify transactions. And what if that's not needed anymore? Then you can start to think about how revolutionary something like Bitcoin and Ethereum can be, because so many of these tasks that are already currently being performed or conducted by the financial system don't need the financial system anymore. Okay. For example, what if I want to send money from the US to Mexico? So I'm living in the US and I have family or someone in Mexico or another country that I want to send money to. Right now, you have to go through a financial intermediary, and in my understanding is in a lot of those cases, you're paying a very high percentage fees to transfer that money. With Bitcoin, that's almost non-existent. Like, you can send significant sums of money via Bitcoin for very minimal fees, right? As opposed to having to go through Western Union or any number of other existing intermediaries like that. And you can do it at will on your own without having to have a government agree to that happening or saying that's okay, or someone tracking that, or again, charging you exorbitant fees to make that happen. So that's one easy example. Again, that may not apply to a lot of us, but you can think about on a global perspective, there are millions and millions, maybe even billions of people who that has significant meaning for. Or what about people who live in countries who have very volatile currencies? In the book Digital Gold, one of the strong proponents of Bitcoin is a man from, he's been very successful in Silicon Valley, but he's originally from Argentina. And they talked about the extreme inflation in Argentina makes currency and exchange crippling in that country. It's just a major issue there. But with Bitcoin, it can help alleviate those things because you can have another way to store value and transfer value apart from that failing or struggling currency. Okay. Or then you think about, what about people who don't have access to banks? There are billions of people in the world who have no access to a bank because either the banks don't exist in that area, or they're not close to them, or they don't have enough credibility to have an account with that bank, according to that bank at least. So there's all these different areas where a digital currency using a blockchain has amazing potential with. And I'm not even scratching the surface, and that's just currency potentials. I'm not even scratching the surface upon a digital currency like Ethereum or a platform like Ethereum. And so basically, I'm trying to think how far I want to get into this on this episode. But like, for example, Ethereum, Bitcoin is thought of much more traditionally as like a currency, the way I've described it so far in this podcast. But Ethereum has a currency with it called Ether that fully operates as a digital currency in the same way, in many of the ways that Bitcoin does. But Ethereum has a lot more potential on top of it because it was designed to not just to actually be a platform for other businesses to build their business on the Ethereum platform. You think about it, maybe like the Apple iTunes or Apple App Store. Apple has an operating system they've created that developers can come and build applications on that operating system, right? And the more people that build applications on the operating system, the more valuable and that operating system becomes because so many people are tied into that. What Ethereum offers is and again, I don't understand all the coding technology behind it because that's just not my way I'm wired in my background. But it allows people to build businesses or portions of their businesses on the Ethereum network. And the reason Ethereum is a big deal is this term called smart contracts, which you've probably read. If you've read anything about Ethereum or Bitcoin, you probably heard this idea of smart contracts, at least in reference to Ethereum. And essentially what a smart contract means, as my understanding of it is, it's a contract that is basically once it's enacted, it's irrevocable, it is guaranteed to enact, and you can't stop it. So, and the reason that's significant again is you think about, well, you no longer need things like escrow accounts and things like that, because if you have a contract that, okay, if person A and person B agree upon the terms of this contract, and then once it's executed, the reason you can't stop it and you can't undo it is because, like the blockchain with Bitcoin, once that smart contract is enacted, it is then recorded on the blockchain, and there's a record of that transaction or contract on all the thousands of computers that are running, or there are nodes that are connected to the Ethereum network. So again, because at that point, once it's enacted, I can't then say, oh, wait, I didn't mean that. Oh, no, wait, that's not what I meant to happen, or I'm not going to follow through. I can't. It's done. I can't undo it, because if I try to fight it, then all you have to do is look at the Ethereum blockchain, and it's going to show, well, you said yes, and we have record of it right here. Okay. And again, there are so many functionalities and use cases of this that I cannot even think of, and many of them that are out there right now that I don't understand yet. And here's the thing. There is so much still to be proven with these. It's at this place where the potential is enormous. And I like to compare it to the internet in the 1990s. That led to the dot-com bubble. There was extreme optimism and excitement about the unbelievable potential of the internet. And we were right. The potential was and is unbelievable. But at the time, it was such a new thing, at least on a wide scale, that from a business and a consumer level, people were like throwing darts blindfolded at stuff, trying to figure out how to make things work. And people didn't want to miss out on the excitement of what was going on. And so you have money being thrown at businesses that did or did not have legitimate business models. And people were starting businesses because they knew money was flying around. And like, hey, I can get money for a very, very beginner or non-developed idea. So I'm going to do that. That exact same thing is happening right now with digital currencies. And you think about it, in a lot of cases, if you go to coinmarketcap.com and look at all these digital currencies listed on there, it can be confusing. It's like, well, are these currencies or are these stock in a business? Are these currencies? Are they equities? Are they something else? And honestly, it depends. In some cases, they're currencies. In some cases, they're currencies and they operate kind of like equity, but you don't have ownership over the business, but the currency increases in value as that business model becomes more valuable. And so it's just kind of like this mixture of different things, but you don't have any ownership of that company by owning its currency. So it's a unique thing in that sense too. But again, most of the digital currencies represented on there can be thought of as companies. In a lot of cases, not always. And again, with coinmarketcap.com, you can click on any one of those links and you can then you can see the price history of those currencies, digital currencies. And then you can click on a link to go to the website behind the digital currency to try to understand it better or get more confused in some cases. Sometimes I go to those websites and I think I have no idea what you're talking about because you have all these engineers creating these currencies that only know how to talk to engineers in a lot of cases. And I'm not trying to be negative, but I read what you're saying and I'm like, I'm a pretty smart guy and I've got a lot of finance and investing background and I have no idea what you're talking about. So there's opportunity there too if anyone wants to help digital currency companies communicate with the real world. And so, okay, I'm already over the time limit I wanted to dedicate to this today. I'm about 35 minutes now. One thing I want to bring up too is, first of all, a lot of digital currencies are limited in number. Like Bitcoin, for example, there will only ever be 21 million Bitcoin. And so then you think, well, what good is that when there's like billions of people in the world? Well, it's almost infinitely divisible. Like if you go on right now to an online exchange like Coinbase, like Coinbase.com, and you want to buy $10 in Bitcoin, you're going to get like 0.002 something Bitcoin. So you can break it down like to the decimal, like way down there, depending on how valuable Bitcoin is. So even if Bitcoin went to like $100,000, you can still do it for small transactions. So I just wanted to mention that because I know some people are curious about how that works. Another thing is the idea of public and private keys. I'll probably talk about this more next week, but the way, I should say this for next week because basically when you can store your digital currencies and things, you call them wallets because that's how we understand I'm holding my wallet right now. I have credit cards in it and I have dollars in it and I put my currency in my wallet. So in the digital currency world, the same terminology is used, but you can have a wallet stored on an online exchange. You can store a wallet just digitally on your computer. You can have a wallet on an online exchange elsewhere on your computer. You can also have a paper wallet because basically your wallet consists of two things, a public and a private key. The public key is what you can share publicly with anyone you want. It's this long string of digits, usually numbers and letters. And basically, so if someone wants to send me, say, Bitcoin, I can give them a public Bitcoin address to my wallet, and my wallet can still be perfectly safe. So people can send me money, but they can't take anything out of that without the private key, which is another very long string of digits, again, usually numbers and letters. And then with that private key, that private key allows me to open up my wallet and take things out of it, to pay someone else or transfer from one wallet to another. And so if I print out a piece of paper that has a public key on it and the private key on it, then I can at any point send Bitcoin or there's different wallets for each currency in most cases. I can send Bitcoin to that string of digits on my piece of paper, and then that Bitcoin is then sent to effectively not to that piece of paper, but the numbers, the account represented on that piece of paper. Okay. Which again sounds a little crazy, but how different is that than having a bank account and being able to wire money to, the bank account number, the banking information on a piece of paper. I've done that. I've printed out a piece of paper that has the name of the bank, the account you're wiring money to, and I can hand it to my banker and they wire money to that account based upon the information on that piece of paper. So some of these ideas may not be as different as we may think they are. But here's what I'm going to do. I want to talk about Ethereum. I want to talk about Ripple and Litecoin and lots of other digital currencies. I want to talk about how you can buy them and sell them and store them and things. But I'm going to save that for the next episode. So stay tuned for that. I hope today has been helpful. Again, my main goal today was to help provide more of an introduction to people who may feel like you're on the outside looking in on digital currencies. If you feel that way, you are not alone. I'm telling you, we are still in the extreme early days of digital currencies. And even though there have been extreme price run-ups in the last several months, this is August 2017, and back in May, you saw extreme price run-ups, and there's a little bit of there's a big pullback, and there's been a pretty big recovery. And where are we in this? Is this an extreme bubble? Are we just at the beginning of just extreme growth? I think probably a combination of the above, but I'll talk about that more next week. But for now, thank you so much for joining us on the Invest in the Family podcast. My name is Brian, and thanks for joining the family. And again, don't forget to subscribe from whatever outlet you're listening to, because I'd love to have you join us next week and ongoing. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.